When you're buying a home with an HOA fee, there are 3 important things that you need to consider. Number 1, your HOA fee is going to be added to your debt to income ratio for your loan. So if your lender tells you that you qualify for $400,000, you need to realize if you have a $300 HOA fee, they're going to take that out of your debt to income ratio, and then you're going to qualify for less. So whatever you do, be sure if you're tight with numbers that you check with your lender, give them the HOA fee of the property you want to buy, and make sure when they look at that, the taxes, that everything's going to line up with your debt to income ratio. Number 2, what does that HOA fee include? So many times I have people say, I'm not going to buy any property no matter what it is if the HOA fee is over $150 a month. Now, if qualifying is not a problem, what's really important is not really what that fee is, but what it includes. For example, I have a small property in Park City that has a really high HOA fee. It's $550 a month. And I know that sounds crazy, but that HOA fee, it includes my internet, it includes DirecTV, it includes water, sewer, trash, also my electric and gas, absolutely all the maintenance and everything that I would possibly need there. So I don't pay anything else. If I were to take out those fees, add $60 to $80 a month for internet, probably $50 or $60 for the TV, the electricity, and all those things, the fee would probably be more around $250 a month. So for me, I don't mind it as much because I realize that I would be paying for those things anyway separately. So number 3 is insurance. A lot of these HOAs are almost always going to include some of your insurance. If you're in a townhome, in a condo, things like that, and if you were uninsured, if that building had your condo burned down, you can't have a hole in the building for everyone else. So they want to make sure everybody's covered. That way, they don't need to worry about that. So you're always going to have usually earthquake insurance in there, and you're going to have the structural insurance. So when you do get your insurance for your property, it's going to be less than if you were to be paying for your own earthquake insurance or your own entire insurance policy. You'll probably need to get something called an HO6 policy, which is just going to cover your interiors, but that's going to be less money than if you were to cover an entire single family home without HOA. So those are things that are really important to consider when you're paying a fee for HOA. There's a lot of other things that I'd like to talk about with HOAs, but this one thing is just really important to keep in mind when you are looking at the fee itself.